Alright traders, we're back. Market video signals, check this out. Swiss Japanese yen in an explosive move. Guys, we've been here a few days ago. Price was still trading low. Was just coming off the corner, you know, the interaction with the moving average, right? It was just pushing itself off that moving average. Boy, were we surprised by the sheer intensity of this move. Really impressive stuff. But guys, we're closing in on target. We have already checked on the first one, right? Our secondary target at 113.63 was taken. Well, say taken is to put it lightly, right? It was crashed by price action. It just went through as if it wasn't even there. Now, it didn't take the previous high yet, so even though it's pulling back a little bit today, that's natural. Just a bit of a natural reaction to yesterday, right? But it may actually end up positively at the end of the day, taking the previous highs. Or if it's going to go down, it's going to go down all the way and keep itself by the end of the day, which is also going to be by the end of the week, right? It's going to be below 113.63 and then just leave a huge spike here. Now, that's not a good sign. That's actually a sign of a downside reversal. In that case, only in that case, if by the end of the day price will come back below 113.63, doesn't seem too likely, but you know it can happen. Then of course we'll get out completely. I mean, here's the deal: we were building up a fat position here, just as you saw with the New Zealand dollar, pretty much the same. We were just firing up, boom, just trade after trade, right, with every positive day. But we've adjusted those trades, all the first 4 or 5 to 113.63. We knew this is a big target, right? And we wanted to take a big chunk off this position. So that's why you only see 2 trades here, but there were 7. So there was a big load of profit that we are removing from this position, right? We're reducing the exposure. At this point, the risk is getting bigger, you know, in comparison to the reward. Now, I want to show you, just to refresh your memory, of course, where we think this should go, and this could go. I mean, we think price is breaking out right now, 113.63. We have to confirm that, right, with a weekly closing out, breakout, which we're going to have by the end of the day today. It's going to stay above, that's a good sign, and then we can carry on. If not, we're going to have to consider pulling out. But basically, 115.25 came from a simple measurement. It's a Fibonacci projection analysis, that the same technique we're using is probably the most, the most popular, the most common technique in our, disposal, right? So we measure the previous move from the top to the bottom, and we just apply 123.6, right? 123.6. That's the biggest projection. That's the most important, probably the most important projection level. We keep aiming at, right? So there you go, 115.25. That's where it is. That measurement. So we'll see. I mean, but that's, like I said it before. That's the shaky part. Right, that's the part we can easily let go, right? We've done so well up to 113.63. We can definitely retire this position. However, that's why we're reducing the exposure. We're keeping it small, and we're gonna be quicker on the trigger to get out, right? But we definitely think we might even manage to catch the last stretch here. Now, by the way, if price will be showing goodwill by, just keep providing more positive days. I mean, let's just say this: if today's going to end up positively at the end of it, we'll be happy on Monday, to keep to come back and increase the position again, going forward to 115.25. Right? That's a promise. We'll definitely be back to follow up on the situation here. That's about that for today and for this week. Forex Market Video Signals. We'll be back on Monday. See you then.